Hey, what's up, guys? This is Andrew from Dividend Growth Masters. Now, today I want to talk about something a little bit different. So, I haven't really done a stock video in a while, and that's what I want to do today. And this one is, like I said, a little different because typically I like to invest in larger companies for my dividend stocks. Typically at least 5 or 10 billion market cap. Larger companies that are a little bit more stable and a little bit more capable of paying long-term dividends. So this one goes kind of against that. And if you've taken my online course of dividend investing, this one definitely goes against that because this is a very small company. The market cap is less than 150 million. It's called Armanino Foods of Distinction. Ticker symbol is AMNF. It actually trades. It does not trade on one of the major stock exchanges. It doesn't trade on the New York Stock Exchange, NYSE, or the NASDAQ. It trades over the counter on the OTC markets. And the volume is pretty thin for this stock. But I'm going to tell you why I love the stock. So just quickly looking at the chart, it's done pretty well for itself over the last few years. It was about less than $2 per share in 2014, and it's about 366 today. It's actually near a 52-week high. Current dividend is about 2.5 cents per quarter, coming out to a 2.73% yield. Stock isn't incredibly cheap. It's about 23x earnings, which is a little bit high, but they have been growing very fast for a long period of time, which is what I like them. So, just looking at some of the information right now, that's kind of what's going on. So what I like about this stock is just the long-term growth potential that it has. It's still a pretty small company, but it's been growing like weed for the last 10 or 15 years. So it was started by an Italian immigrant who has since passed away, I believe, and someone else runs the company now. But it's really efficiently well run. They generate a lot of their sales in the U.S. They do have a growing international business, primarily in Asia. But they've been growing sales for the double-digit range, low double-digit, around, between about, I would say, 8 to 12% per year. So high single-digit, low double-digit range. And they've been growing the profits pretty well, too. They're very efficiently run. They're based in the Bay Area. So what they do is they own a lot of different pesto businesses and sauce businesses that they sell to restaurants. So if you've ever been to like an Italian restaurant or something like that, they've probably used some of these sauces that they make. They also sell the sauces directly. They sell the sauces wholesale to retailers, who then sell to consumers like you and me. So you might have seen their products in the frozen fruit aisle of your local grocery store. So they've grown their revenues and profits pretty well over the last 10 or 15 years. And if you look at the long-term stock chart, you can see that they've done really well. So what I also like about this stock is just the dividend history. So they've been raising their dividends for many years now. Right now, like I said, they're paying a 2.5 cent quarterly dividend that yields about 2.7% today. And the latest dividend will be paid in July 26, 2019, and it will be the company's 76th consecutive quarterly dividend. So they've been paying dividends pretty consistently. And one thing that I also like about the company is they frequently pay special dividends. That kind of frequently kind of goes against special, but they have paid out special dividends more than your average dividend growth investing company. Another thing that I like is just their history of profitability. So they've been profitable for, let's look at the press release here. So 64 quarters of profitability. So 64 divided by 4, that's about 16 years of consecutive profitability. That's pretty good, considering most companies lost money in 2008 because their cost structures weren't right. So these guys have been profitable for 64 straight quarters, which is a pretty good standard to set. So they're well managed. The business has been growing. They're still a tiny company by most people's standards, and they pay regular dividends, and they pay special dividends as well. So even though this is a smaller company, which are typically inherently more risky, it still has a position in my portfolio because of just how well managed they are and the dividend history. So if you want to do some more research, I would definitely encourage that. The company is Armanino Foods of Distinction, ticker symbol AMNF, and there's actually a few good articles on Seeking Alpha if you want to do a little bit more research. And if you do own this company, I'd love to hear your thoughts. Just comment below or just send me an email from my website, dividendgrowthmasters.com. Anyways, thanks for listening, and I'll probably do a few more videos like this talking about some of the more interesting stocks in my portfolio. So if you want more videos like this, just let me know.